Hey guys, Metal Bum here. Today is July 31st, 2019. Today was a pretty big day for the markets. I guess a historic day because it's been a while since the Fed has lowered interest rates by a quarter basis point, which is not as much as some expected, but gold did go down. It dipped a good amount, and then it actually like raised a little bit. And just want to show you guys a little history here. Here's the Wall Street Journal's 130 years of history. This came out July 8th. So it came out a little while ago, but I just thought it was kind of cool to like look at the history of different things that have happened and different coverage from the Panama Canal, 1914 Germany War, World War I. You know, that's the time when there was inflation after the war in Germany, and then that sparked one of the reasons for World War II. Here you see in 1933 when we got off the gold standard, April 20th, 1933. Wooden, I guess, was the gold, he was the Secretary of Treasury at the time. Got us off the gold standard. I think a lot of the European nations, they were having issues financially and they were asking for their gold back, and we just couldn't keep up with it. They were kind of depending on us after World War I. They were all rebuilding, and we were like the super economy at the time, and so we had to get off the gold standard because they were all asking for it. Here's Japan attacks on. So like these sorts of big events, usually like when something like this happens, gold can spike, but I don't think it did back then. I think Germany's surrender in 1945. These are big events that happen, and today was a really big event as well, that they lowered a quarter interest rate in the Fed, and then and that's it's been a while since that's happened, and it's been 10 years. I think it's been since like 2008, the Dow topping 1,000 back in 1972. What else do we have here? I think 1971 was when a lot of ups and downs in the markets over time. Terrible Tuesday, October 20th, 1987, and how the stock market almost disintegrated a day after the crash. So these things, they happen, and when they do happen, gold and safe haven assets, which I think silver is one of them, and silver tends to follow gold when gold booms and busts. I think right now gold is the time to buy gold because it's like we're having it's almost like an insurance against calamity, and like it's like insurance. Silver and gold are insurance against calamity. So right now it's like, imagine if you could buy hurricane insurance and you knew there was a good chance that this hurricane, like 5 days, outlook that the hurricane was most likely going to come to you. Would you buy that insurance? I think most people would. Gold, silver, these precious metals are that insurance. Physical gold and silver are also insurance against that insurance, because there's GLD and SLV, which are like paper gold and silver that are traded. They're commodity traded funds, and I do have some of those, and they're kind of nice because they make it very simple to move in the markets. But these precious metals, these can stay with you forever, and if there's a real shit hits the fan scenario, like a SHFT scenario, which we've avoided over all these years, luckily, but I think the paradigm is shifting, as Ray Dalio says. Ray Dalio has been saying that there is this shift, and we're 2019 is a lot like 2020 or 1920, and he's talking about a paradigm shift, that we shouldn't just go back like 10-20 years, but we might need to go back 100 years and think about these huge shifts. And he's basically, in this article, real quickly, I'm sure a lot of you have heard about it, he says that you should buy gold to hedge against huge calamities. These huge changes happen over time, and I think it's a good thing to hedge for gold and silver. And I think, well, right now, let me see. The reason why I have this up here is because I have the gold-silver ratio, and just to show you trends over time, and I was only showing you that historic Wall Street Journal, because over time, this is what happens. So this gold silver ratio goes up and it goes down, right? And right now we're at the peak, and whenever you're at the peak, that means that gold is overvalued in comparison to silver. We're way up here. Look at the last time historically it was way back here in 1991 that silver was, gold was so overrated. It took 92 ounces, or it looks like 96 ounces of silver to buy 1 ounce of gold, and now it takes 92 ounces, and we're starting to lower again, but it takes about 90 ounces of silver to buy 1 ounce of gold. So it's a good time to buy more silver, in my opinion. I also think you should have a lot of gold as well. So I hold it in a 50-50 ratio. So right now I hold about 85 ounces of silver for every ounce of gold. I have about 1,000 ounces of silver. And so therefore, with that ratio, I think it's that I have to hold about 10 ounces of gold. So I think I have about 10 ounces of gold, but I also have a lot of gold miner stocks. Right now, check out GDX, NUGT as gold miner ETFs. And then there's GDXJ, which is the gold junior miners, which is a lot of smaller firms, smaller companies that have more potential. So like if gold does spike, there's more likelihood that the miners, because they're leveraged, will increase a lot. I also wanted to shout out, because I've been following this guy Dobson on YouTube, and you should check his channel out. I'll leave a link below, Dobson777. He's been following a lot of these charts. He goes by trends and data, which is why I also like Ray Dalio. But like if you just look at the gold, how gold has been acting in the past 20 years, you can see that it went up, it hit this peak of 1800 back in 2008, and then we started pumping money into the system, and that money led to a drop in that money that we put into the system was lower interest rates, and then it led to lending in other asset classes boomed. That's a lot of what Ray Dalio talks about. And then what happened was gold dumped because of that, and then gold has not done well. So if you're trying to find a hedge that is low right now, gold is like pretty low, but silver is way low, way down here. And they're both kind of correlated precious metals, but silver is also used a lot in industrials. So I do like silver because you can hold a lot more of it. But anyways, this long story short on this Ray Dalio article, I'll probably go into it a little more, is he just talks about the history of the last 100 years and paradigm shifts over these 100 years, and how we need to have a paradigm shift of thinking, and how we're overprinting money in the Fed, and there's too much debt, way too much debt that's been used to stimulate the economy. And like Trump now is trying to become this cheerleader to stimulate the economy, and it led to, like the last time we had a big bubble burst was in the 20s, after the roaring 20s, the 30s were glim and glum, and then the 40s was just a grind, and then we finally had this recovery in the 50s, 60s boom, 70s was, low growth but high inflation. So that was a time when that we can hit again, high inflation, and that would be a good time to hold silver and gold. But in the 80s, there was this falling inflation, but see how it went over decades? Like we're way through this. So the roaring 90s was when it burst, and then it busted in the I think 1999 is when the first of the markets busted, and then in 2001, I think it busted again with the dot-com bubble and the 9/11 attacks, it says right here. But yeah, now we're in the roaring 2000s. We're just like the roaring 20s. And now 1910 to now, it's almost like there's a shift. It's reflation. This is more data. And then basically, let's go to this part 2 paradigm shift, as he's talking about central banks printing too much. PE ratios are way too high in the stock market. And then he goes down here, and look how long these trends go, and then like how he says we're like right here again. We're right here, and then so we're back here. So where are we? Like right here. Anyways, long story short, he basically says to buy gold. And this is Ray Dalio. He's the largest hedge fund owner, Yale grad. He's a multi-billionaire, not a millionaire, but a multi-billionaire. And he's talking about a paradigm shift in that we should be hedging and buying gold. There's going to be low yields in the bond market, low yields in the stock market. And basically, he makes this argument that there should be a paradigm shift with all the Medicare, Social Security. This is unsustainable, basically. There's socialists and capitalists fighting. There's all this stuff going on. And basically, he says in this last paragraph, after all that, the answer is gold. And if you want to buy gold on steroids, buy silver. So anyways, guys, Metal Bums out. Got to make this video a little shorter. I will talk to you guys later. I just wanted to up something on this historic day where we had a Fed rate cut, and it's been, I think, almost a decade since the last one. So this is a huge day, July 31st, 2019. Don't get too crazy. Now is still a great time to buy silver. There was a bit of a dip today. There's a good time to buy gold. I would follow the ratio. Follow a lot of other people on YouTube, as well as doing your own research, guys. I don't want anyone to get burned. Don't put all of your stuff in one basket. I do own stocks, I own bonds, I own real estate, lots and lots of real estate. And just try to leverage not leverage, but hedge with gold, silver, precious metals. All right, guys, Metal Bums out.
Please like, rate, and subscribe.